All right, traders, what's going on? Jamie Setley here. It is Thursday night. Um, there are a couple people in here. Sorry for the, I know, extremely late kind of warning, if you will, or whatever on this, but I'm going to start doing these webinars at night. Frankly, the probably better time to do it. I'll probably end up doing on Tuesdays. Tuesday or Wednesday nights. I think Tuesday would actually be a really good time to do it because you've got, you kind of get through Monday, which is typically a pretty slow day. And by Tuesday, a lot of times you have at least maybe more of an inkling or a feel for that week. So that is the plan as of right now. So doing them, as I wrote in the swing update, doing them during the day for me is just becoming way too much. There's just too much going on. I trade for a hedge fund as well. So it's just right now, it just can't do it. I mean, you got too much stuff to do. All right, so let's start with DXY here. Look, I've been totally wrong on this, right? I get it. I've been totally wrong in terms of thinking that, we were rolling over. Now, yesterday, after the big spike higher and in Asia last night as well, we had a DSI reading of 94 on the dollar, okay? Now that in and of itself, right, is not super important, right? What's important is when you combine everything. And what we've got is, again, the huge levels up here. We talked about 99.23 as a possibility, right? It's old support back here from Feb 2017. But now you've got also a completed count, okay? So if you take the rally from Feb 18 up to August of 2018, okay, you're gonna get, that to me is your A wave or your first leg up. You go down from here, and now you can actually count 1, 2, 3, 4, 5, okay? The question, of course, I think is on the very near term stuff. So is this done? Because if you look at this, it just from the eye, right? Like right off the bat, when you look at it, it looks like this is probably just a 1, 2, and a 3 up. In other words, this is a 4. And that's why I said today in the update, if we pull back and find support near, say, 98.07, which is going to be the 38.2, it's also the old congestion, then you could be thinking about we could actually go for another run to that 99.20s area, okay? Now look, I can count this. There is a way to count this where it is complete, okay? It's just really ugly, right? So you've got a 1, 2, 3, 4, 5. That just doesn't look right or feel right to me. It feels like a very forced count. So that's why I'm simply open to the idea of this pullback just being a pullback before we go for one more, okay? That is the gist of the dollar thing there. All right. However, if we go back, let's bring in the volume stuff. I'm really liking my fun little volume indicator jazz over here, okay? We have to look at futures for this, right? Because we don't have volume. This is the chart from last night. Let's throw in the indicator. I call it the 2-day, right? We'll go, I think it was 1.5, 1.5. Okay. So let me explain a little bit more about this. volume indicator. The reversals are from when you have a, get rid of all these circles. Really don't need all that. When you have a big move in one direction, right, on high volume, a lot of times that is capitulation, right? Meaning that, you know, it's kind of exhaustion. Everyone's like, okay, like, you know, this is the move, this is it. And then everyone believes in it. Well, when you have the next day in the opposite direction, you have to be at a 50-day high or low. Okay, that's part of the requirements. When you go 50-day high or low on high volume, and then you go the next period, in this case a day, down on high volume, I consider that a volume reversal. So in this case, the barriers for that, you can see that yesterday's volume was 1.81 times, right, the 20-day average. In other words, 81% above the 20-day average of volume. That's what this indicator is, right? Today was 1.61. So just, you know, making it simple, I'm saying the barrier is 1.5 for each day. So if we just look at it, cursory glance, right, you can see here, back in 2014, it did not work at all. There's a very different period, right? In this case, we have that pattern, that ending pattern, right? You had it here as well. You can go back in history too and look at some of them. Did not work here. Here, okay. Worked very well here. You can see that this doesn't happen a whole lot, but you do tend to get some pretty good signals in terms of reversals, right? It's not all the time going to work, but when we combine it with the pattern and maybe some measurements, I think that we have a pretty good argument for a bigger top, okay? Actually want to see what the measurement is on this as well. See the 618 of this. Yep. So look at that. The 618 extension, if this is an A, B, C, in other words, 1, 2, 3, 4, 5, that measurement is 99.21. That's the exact level that we talked about anyway of 99.23. So next couple days, hopefully clear it up in terms of, you know, if we saw the top or if this was just a little top before we go for that final move, okay? So that's the idea on the dollar. If you have any questions, of course, please do ask. All right, moving on. Euro, it's just the opposite direction, of course, right? So same idea. We'll look at the volume chart in a little bit. I'm just focused on this short-term chart. Now, the move from 620 or from 625 is actually a little different in the dollar, in euro than it is in dollar, right? You can, one sec here. So if we look at the euro, here's the drop, right? This actually counts a little more complete to me, right? First leg down, second leg up, third leg down, 4, 5, all right? Also, we've already reached the measurement, the 618 measurement. Whereas that's not the case in DXY, right? We're still talking 99.20 on that. Again, here's that 618. So measure here up to here, B. 618 of this move gets you 110.41. Pretty darn close to today's low of 110.27. That's why I was saying in the update, and again, we've got NFPs tomorrow, so that's going to certainly jostle the market, one would think. That's why I was saying look for 110.60 or so as a level. That's actually yesterday's low right here. Okay. And also it's this very short-term parallel that does hit a number of highs and lows, or sorry, a number of lows, excuse me. Support and resistance 1060. Obviously, you're talking 1140s and 112 are the two parallels to pay attention to on the upside. I like the idea of getting support at 160 and taking it higher. Whether that happens with NFP before or after, who knows? But you know, I'll send out alerts as always. Taking a look at the euro reversals, right? Today, you had one back on May 30th of last year. And you haven't had a whole lot in euro, frankly. You had one over here. That was August of 2015. Before that, you're talking January of 2012. A couple here that would not have worked in May and April of 2010. That's during the European crisis, debt crisis. You had this beauty back in 08. So you can see how reliable these can be, right? Really quite rare. It doesn't happen a whole lot. Even within the massive uptrend in euro throughout the early 2000s, okay? Here in January 04, very close to a big top, was not the top, but a pretty big one, right? Minor one over here, some minor ones over here. And this is within this huge uptrend, and it still identified some pretty good turning points. So yeah, when I'm looking at this, it tells me that, man, it's got a hell of an opportunity to buy euro down here. Okay, let's go to cable. This was the log chart. We did hit these levels. There's really like 3 parallels on them. I believe this is the log scale one. Nope, this is arithmetic. So remember we had hit it on log the other day? Well, now we've also hit it on arithmetic. So that's great because the level we had talked about for a possible low was going to be, I think I said 2109, and we hit 2080 today. In terms of the near-term chart for pound dollar, do need to see a little more, you know, kind of decent construction. You can actually see here, if I pull in the high volume levels, these are from yesterday from FOMC. The big high volume level is actually right here. You can see we've actually stalled right at it here today, around 1 o'clock in where I am in St. Louis. So before we can get long here, we're going to have to get above that spot. So it's basically today's high. But yeah, a beautiful level down here. Again, if we can get up through today's high, we've got something to work with in terms of getting bullish, long, what have you, British pounds, okay? It's a little early for that. So we'll see. But definitely the right spot. The British pound volume thing, I mean, this is awesome, right? How many, I think we had, what I say, 4 or 5 of these in terms of in terms of the bullish ones in the history of cable. So we had one yesterday, excuse me. That one's not worked yet. Had one over here in 2016. 2009. 2005, which actually is pretty similar to now because we kind of went lower here the next day, screwed around, and then we ended up ripping, you know, for a while. Might get something like that. And then all the way back in 2001. All right. Japanese yen. I mean, how amazing was this chart? Right off of the level yesterday, right? So I've left in order to short or to go short at 108.10. I mean, if you're trying to be, you know, perfect, I guess you could try 108.15 or something. But you can, you know, big level. I mean, support here, resistance, 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 resistance. So look for that level, get off to a good start in that trade. And I do think that the downside levels we're talking about here could be, first, you're looking towards the 105 area, which again is the 75 line of this channel, and that's coming from the 25 line. So we're talking about symmetry. And then the downside level ultimately is 103, which is the bottom of the channel and 2 legs down from up here. Okay. And eventually, you know, if you go to the long-term page, we're talking maybe mid-90s or something like that. What I also like, by the way, on this dollar yen in terms of the level, so 108.10 is the short, right? We've got, look at the 10, 20, and 50-day averages are all between like 108.15 and 108.25. So that's clearly the level, right? Hopefully we get it. All right, what about commodity currencies? Aussie dollar is a complete disaster. We actually are down for 10 days in a row. And I don't think, I think it's maybe happened once before. Let's see. So 10 days, I think it was like in the 90s, maybe 97. Yep. So Aussie dollar, only other 10-day decline in history was on December 16th of 1997. I showed that during the swing update today. I had that chart of FXI of China. This actually might be something to pay attention to in terms of the Australian dollar, because we're back to really moving like crazy off this China news stuff, right? So if we can get maybe some support between 39.20, 39.90, something like that, then maybe you can get support for China, support for Aussie, et cetera, right? That is certainly a possibility. But other than that, and other than the fact that we've gone 10 days down, there's really no other reason to think that Aussie's going to rally here. I do think you get a bounce. I mean, 10 days down, a bit extreme. But in terms of chart levels, I actually don't have anything right here. The level I've got, the next level is that parallel right here, right? And that's actually, it's pretty much at the flash crash low. Right there. So that's going to be 67.64. On a very long-term chart, that's actually a really big level too. If you go back and look at Aussie dollar chart, here we go. Okay, so yeah, right here. High from 1999, right? That was exactly where the flash crash low was in January. So that's that same spot. And you have this parallel here as well, just below that. So that might be the place to be focused on for the Australian dollar. It's essentially like 60, call it 67, right? Currently 68.27, but that's an area where I would focus on or put some focus on for Aussie. Kiwi, don't have a whole lot to say here on Kiwi. Haven't really been focused on it. The only thing I will say is that I will pay attention to 65.22. That's going to be the 523 close. That's daily reversal support. Okay. Guess we have hit weekly reversal support today. Right. Take the low week, put a line over the close, and that's where you're looking. But again, a little more focused on things like euro, especially Japanese yen here. Right, you saw the Nikkei breaking down through its trend line chart support, so that hopefully gives us a little tailwind, and the seasonal factors too. Right now, all right, here's one where, like I said, that dollar index 98.07. Right, that's a big level to watch or pay attention to. Keep an eye on dollar Swiss here, okay? Because if we're going to get that final run or whatever in the dollar, then what you're looking at for dollar Swiss is that move to 101 or 10060, right? Watch the lower trend line here, okay? It's going to be essentially like 98.50, 98.70. So, right up in here somewhere, okay? If we're getting that last dollar move, I think this is kind of the tell here for the dollar move. If we drop in dollar Swiss and find support in that 98.50, 98.70 region, then I'd be thinking that we are going to go for that final run. And that, could very well hit here tomorrow. I mean, with NFPs and all that, you could get into that zone tomorrow. I will say that 10050-60 area is just huge, okay? It's a really big spot. I'll show you the longer term chart here in just a second. Let's get to that. Okay, so you can see it here. Right, underside of the line, 2018 low, 2018 low in September, right? January 10th low, traded up into there, screwed around here back in June, tanked off of it, trading within this fork. You've got the upper parallel from this fork and the underside of this, all going to be over the next couple of days, kind of 10050, 10060, and just how, and two legs up. I mean, there's just so much stuff up there. and all these old highs. So yeah, watch out for that 98, 50, 70 area. And if we do hold that, then I do think you can go up here, right? Last little stinger in the tail, if you will, for the dollar. We shall see. All right. Okay, so that's what we're working with in FX land. Obviously, a lot going on with equities. You know, over the last, month, really throughout July, we were talking, or I was pointing out all kinds of stuff in terms of, warning signs, right, for equities. We've been talking about this NASDAQ thing for a while here, right? The big breadth divergence, the AD line in pink, right? So advances minus declines. That made a high all the way back in May, right? It made its big all-time high back in August, okay? So we went to a new high. So you have a triple divergence, really. So you've got, higher highs in stocks, lower highs in NASDAQ AD line, very bearish. And you also have it on a shorter term basis, right? We did not go to a new high in the AD line when the prices were at new highs back on the 26th, okay? That did not happen with price. So that is a big warning sign. We had the very small range thing that I was talking about. We've had volume reversals in a number of sectors, right? Small caps. We had it in XLK, which is tech, essentially the NASDAQ, but I think it's weighted very heavily towards Microsoft at this point, given Microsoft's run. So moving to our price charts for equities, S&P, essentially, so this is the SPY chart from today, right? Pretty simple. You're looking at a shift fork from the December low, right? The three levels to pay attention to, I think, over the next couple of days. 293.08 is the gap, right? It's also a parallel within this. Obviously resistance up here, 296.50 or so, and ultimately probably talking 289, 290 support, because that is the symmetry level for S&Ps, right? Came off of the 75 line, 25 line, look for support. That might be kind of where you finish up or get a kind of a first impulse down, like a 5 waves down, and then you get a rally. In fact, I think we've got the 1618 down there. So if you just go extend here, right, first leg, 289.50 is 618. So that is key, right? That would make sense to go down to that spot and then bounce. So that's where I'm looking in the S&Ps over the next couple of days. Here's the futures chart for you in case you were watching this and or trading it overnight. Same idea, of course. You can see that center line. Let's make that center line. Why is that like that? Hold on. Okay. There you go. So center line, key level for probably some resistance if you get up there. I don't know if you will or not, but if we do, it would be great level to sell into. Again, it's also going to be basically old lows here, right? So support from the 17th, right up here at 29.75. Down into 29.15 or so. Basically what we're looking at is probably a flush down below the June 26th low, and then we would kind of be thinking bounce possibility, right? Okay. Let's take a look at the metals because they were obviously big movers today as well. Now, in terms of gold, today's move takes us to a new high. I'm still, look, you could still get down here at some point. I'm not saying you won't, but if you do continue higher from here, today's breakout's for real. Basically, be aware that 1525 or so, that's the old lows from over here in 2012. That's probably going to be pretty good resistance. So this move caught me a little off guard because I did think after the recent reversal action that we were going to come off a little bit more. But silver actually hit really good support yesterday. So that was the level we had for silver. I put that in the update yesterday, right? 1601, that's where we traded to. Okay, we held that level beautifully right off that parallel, boom, boom. You're still in consolidation mode here. You still don't have a new high in silver and you have a high in gold. So you have that non-confirmation right now. It's a little, kind of a hairy situation here for the metals, and you haven't really broken out either, right? Silver breakout occurs above this line. This is the trend line back from April 2017 and September 2017. Until you break that, you are just in a back and forth trading zone. Don't let anyone tell you otherwise, okay? And ultimately, this beautiful pink magenta line here is the real deal. That's the real support for silver, okay? And this line, this is the one that goes way, 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 way back, right? And I always think that kind of a good way to look at this, it was the action that occurred back in 2008, right? Because in 2008, if I zoom in on this, just like today, we went down below it, right? We went down below it. It was kind of resistance, support, then it was resistance, and then we went back above it, and then it was support again. It was support, and then we took off, okay? If we look at that here, pretty similar, right? I mean, you drop below it, it was resistance, it was support, you traded around resistance, ripped above it. At some point in the future, I'm willing to guess, I'm willing to bet this is probably going to be support again at some point, right? And that's going to be right on that daddy right there. Okay, so irrespective of what happens, say, between here and here, right, you could trade back and forth and get a little surprise dump into this level. That's where the really big support is for silver. Let's look at crude, which had a insane decline of 7% today. Weekly chart for context. Again, this reminds me a lot of kind of back in 2002-3 when we were trading, spiking down through the center line a lot. This center line is obviously very important. You can see all the big levels that you've hit or all the big times you've hit it and bounced off of it or found resistance on it, okay? And that's going to be like 48, 49 bucks. So if we can trade down over the next 2 weeks into that level, then I'm willing to bet, then I'm willing to really think about a bigger long position in crude. One reason besides this price chart is actually the seasonal tendencies here. Okay, so crude been following its seasonals really well this year, right? Called like the kind of the mid-May top. Basically weeks that end 8/9, 8/16. So that's after next week, and then 2 weeks from now, those are bottoming periods from a seasonal standpoint for crude oil. So maybe lower into that 48, 49 bucks, and then, you know, maybe position yourself for higher prices into maybe October. That is what I'm thinking with crude. I did notice that I had the S&P seasonal chart up here before, and here's why. So we are in a seasonally weak period right now, and really it's kind of that way through, you know, October, mid-October. So if you're going to have something crazy happen in the market on the downside, it's probably between now and mid-October. That'd be my guess, at least. All right. Nice, getting a little bounce here in dollar yen. I was hoping we'd get that because I didn't want this thing to go straight down. I'd like to get a shot at shorting it up at the level. And those are really, that's kind of the biggie for me. This is everything that I'm focused on here. Obviously had a ton of charts in yesterday's update. Oh, the bonds, TLT, can't forget that. So TLT, we've been on this like white on rice, and got that TLT chart. I'll just show the one from today because I don't have it over here right now. So TLT from the November low of last year, right? Big one up, a little two down. And now we are in the third wave, nearing the end of wave three, I should say, right? 1, 2, 3, 4, 5, clear as day. We're probably getting towards the end of that. As I mentioned in today's piece, you've got wave three equals 1.618 of wave one at 137.99, and wave 5 of 3, excuse me, equals wave 1 of 3, another equality between waves, right at the same level. It's like 10 cents below. And you've got all these parallels up there as well, right? So you've got a lot going on up here for resistance in the bonds. That's going to be obviously extremely important with what's going on here. Here's the log chart, okay? You've also got the 786 retrace. I didn't even have that on the other chart, and that's going to be 136.80. So essentially, we're talking probably a high of some sort, right, in the bonds, in TLT at 130, between, give it, 137 handle, right, is going to be my guess. Now, that's probably also, by the way, not the end of the entire rally at this point, because we'd be looking for just a big fourth wave down, right? So big pullback, but don't really need to think about that too much. All we need to know is that we are nearing massive resistance, and we're probably going to top out up at that price. Okay. All right. Are there questions or anything? Because I have gone through everything I've got. Nope. All right. I will get this archived. And again, we're going to be doing these webinars in the evenings. Probably Tuesdays, I think, will be the best time to do it. But yeah, I'm looking forward to kind of the change, right? It's a little more relaxing actually than doing, because a lot of times when I'm doing the webinar, sometimes you have trades I've got to put through, I've got to do stuff, and it's just your mind's all over the place, and it looks a little too difficult to do 10,000 things at once. All right, so thanks a lot, guys, for showing up. Sorry for the late notice, but yeah, plan on these being at night. Obviously, always check the homepage. You know that. All right, always check the homepage, and this is where the weekly schedule is, okay? All right. All right. Have a great rest of your day. I know there's only one day left in the week, but have a great rest of that week. And again, NFP's tomorrow, so let's get ready. All right. Talk to you later. Bye.